Transitioning starts from the beginning of a deal. That is to say that you don't at the end just start doing things. You cannot cancel the lease agreement. You have to honor the lease agreement. The first thing you want to do is to secure the property. So this is a very, very important thing. You want to ensure that you have charge of the locks, the keys, everything. You need to ensure you have that. And not just that, your property managers are already on ground. Hello everyone, welcome to another edition of Ask the Multifamily Expert. And today I'm going to be the guest and also the host. So you permit me if I am double tasking at this point in time. Today we'll be talking about what are the strategies from closing to stabilization, your 90-day plan strategy or action plan, your 90-day plan. This is not only for people that are looking at closing properties and all that. This is for everyone, because as long as you're in the multifamily industry, you want to understand how the process works from beginning to the end and all that. So today we're going to dive right into what that looks like and what you should be doing if you are looking at venturing into this. So there are three aspects we'll be breaking it into: transition and immediate action. That is your 0 to 30 days plan under transition and immediate action. Second topic we'll be addressing under the 90-day plan is from 31 days to 60 days is executing your business plan. And the last one, which is from the 61 days to 90 days, is fine-tuning and stabilization. So those are the things we'll be talking about today. But before I get started or I dive into those different categories I've broken it into, I want to really talk about transitioning. Transitioning starts from the beginning of a deal. That is to say that when you need to transition, it starts from the beginning. You don't at the end just start doing things and all that. I always make mention of this and I'll still reiterate. You make money when you buy and not when you're selling. So many things would have been done at the beginning. So let me break it down. There's so many things that you need to do during transition that happens during the time when you're signing your contract with the buyer. So many things need to be addressed even before you go under contract. So that is why I'm saying that most of the items I just listed starts from the beginning, not literally from 0 to 30 days of when you've closed. So things like you should be addressing collections, your PSA, you should be addressing contracts in your PSA, you should be addressing so many things in your PSA. So when that time comes for you to transition, those things are taken care of. So I'm going to break them down so that we understand what exactly I'm talking about. So when you go under contract for a property, literally it takes 90 days or more for you to close. Multifamily is not single family that closes within 30 to 45 days. The standard most times is 90 to 120 days, but some people close 60 days, but it's very rare and all that. So it really takes 90 days and above. That's the standard. While you are doing that, there are some things you should be doing right before you close. So we know those things that we should be doing. Our due diligence should be taken care of. And not just that, you'll be having some interactions with your lender. By the time they're about wrapping up, let's say you're about to close, there are some things you need to do right before you close. So it's not just for you to start up after you close. So these things I'm mentioning that between 0 to 30 days are literally right before you close. Let's say you know that you're going to close in a week time. What should you be doing during that time? So during that time, you have to have an agreement. You'd have had that agreement with the seller. You have to do a final walkthrough. And let me tell you why that is important. Because it's possible that the property you saw during your due diligence or at the beginning is different from the property you're actually purchasing. Many things can go wrong. We've seen cases whereby you went to inspect a property, but there was a fire outbreak. Part of the property got burnt, or maybe a roof that was intact before just pulled off and all that. The seller is supposed to inform you about if there are such damages, because your purchase agreement also addresses those kind of issues. But what if a seller decides to be mute, not to disclose those things to you because he feels like, okay, you guys are going to buy it anyways, deal with it? What do you do? So it's in cases like that, you need to do a final walkthrough to check if those things you saw during your due diligence are still the things that are there, excluding wear and tear. We know there's a room for wear and tear. It's possible that these things went through natural cause due to wear and tear. Those things are exempted. But things that are not due to wear and tear, you need to confirm or verify what exactly is going wrong. So those are the things you need to start. You need need to walk through the entire property to check. Another thing you need to do is to verify your inventory. Let me tell you why that is very important. Because when you're buying a property, in the purchase agreement, it has what exactly you're buying, the property and the entirety of the property. That is, anything on that property literally belongs to you. And your PSA is there to spell it out. I've seen cases whereby the seller goes away with the entire inventory of the property. So that is why when you are signing a PSA, when you are requesting for due diligence item, it's important that you request for inventory stock. You want to know exactly what they have, and once you know what they have, it means that once you close, it's for you. Except if there's an agreement between you and the seller that states, I'm giving you this, but this and this I am taking. I've seen cases like that whereby a seller will say, yes, you can have this entire inventory, but this actually belongs to me. It's not for the business. I have to take my personal belongings. Those things, yes, they can, if you have that agreement. But if there's no such agreement, you literally own those things in that property. So it's possible that when you go and do your final tour, you find out that those things have disappeared. And those things cost a lot of money. Let me give you an example. One of our properties in Pennsylvania, we bought the property with a shuttle, a bus. The good thing was that we requested for the inventory, and that was part of the inventory. It means that the property owns the shuttle bus, the shuttle vehicle. So when we closed, the seller sent someone to come and pick up the vehicle. We had to refer back to our contract, and we had to give him our inventory, and we refused and said, based on this contract we have with you, we own this bus. And because of that, the seller had to zip up, and he told the person he sent to go. So these things cost a lot of money. So it's very important that you understand what exactly you are buying from the property and all that. So these are things you literally have to start doing before you close. Another very important thing you need to do before you close is to start changing accounts. So we have some accounts like the utility accounts. We have accounts like the phone company. It's possible that this seller has generated a lot of traffic. People have known that property with a particular number. You don't want to lose that phone number. The phone number that they've been using to contact the property. You want to take charge of it so that any leads or any prospect that comes through that number, you can easily grab. There was a time we're closing because we're busy extending. We had issues with closing, not from us, from the lender. So we ended up saying we're going to close today. That day will come, we extend. So we extended like 4 times, and the seller was tired. The seller had to just go and terminate the phone company contract. And if you don't grab it within 24 hours, you get to lose the number. So we lost that number. And that seller had owned that property since 1996. He had owned it for more than, let's say, 20-something years. So we lost that number, and that was a very sad thing for us. So we had to start afresh. You don't want to lose those kind of information. The phone number of the property, you want to transfer it right before you close. Utility as well, because you want to ensure that there's a smooth transition, not just for yourself, for also the tenant. You want to ensure that the tenant's utility are transferred. So we always start this process before we close. We start talking to the electrical company and gas. We start talking to the water company. We do all those things right before we close. And we sign a contract just before we close, not when we've closed, because these things need to be sorted out so that you can ensure smooth transition during that time and all that. So it's very, very important you go through that process. Those are some few things that you need to do right before you close. So the question for me here is, what are the most critical steps? If you have any question, please, you can put it in the Q&A or in the chat. I will ensure to answer them and all that. So we have one in the chat. It says, what are the most critical steps to take in the first 30 days after closing on a multi-family property? The first thing you want to do is to secure the property. So this is a very, very important thing. You want to ensure that the locks, the keys, you have charge of the locks, the keys, everything you need to ensure you have that. And not just that, your property managers are already on ground. My strategy is I start my acquisition. All the periods I am busy underwriting or busy looking for deals, everything is alongside with my property management company. So it's not after I've bought a property, I'm looking for a property management company. No, you start with them from the beginning, because one, they need to understand the property and give you their own projections and indications of why you should buy the property or why you shouldn't. Because one, they are local, they understand the market, and they know what it is for you to expect. So these are things you need to do right before you even close the property. You have to engage them, you have to sign a contract with them before you close. And the good thing is that the lender will definitely ask you who is the person managing the property. They want to see the contract and agreement and see if it aligns with them and all that. So you should have had your property management in place, and you need to let them know their transition process. So when are they deploying? So for us, the day, 2 days or 3 days before we close, the property management and the team, which is the buyer, we go and do a final talk. So after that, let's say we are closing today, the property management company is there that same day, regardless of the time we close. They are there to take over from the current property manager that is there, to take over whatever it is that they need to hand over. And that the next thing they are doing is they start to change the locks, they start to change the codes and all that. They try to do that. Before they even do that, they would have sent out a note to the tenant introducing themselves. You have to take over a property and introduce yourself to the tenant. All these things are done right after you close. You send an introductory letter straight up. That's the first thing to do to the tenant, telling them that this is under new ownership and new management, and telling them how to make payments. Very, very important. You don't want your tenants going to make payments to the previous seller, because these things happen. We've seen cases, even the deal we closed in December, some of our tenants, we had about 20% of the tenants still making payments to the seller. So you need to have an agreement between you and the seller that once that thing happens, they need to reimburse. All these things are stated in the purchasing agreement. So the purchasing agreement is very, very useful. It's a situation like this, you need to draw it out and see what are the terms and conditions that I signed onto. So the seller is supposed to help you transition and to ensure that you collect your entire rent from the tenant. So you need to introduce yourself to the tenant, tell them who you are and tell them the terms and conditions, and also make them aware that the leases that you've signed with the previous seller is going to be honored. Because you should know this by now, that if you take over a property, you can't just go and start changing the lease agreement, because lease agreements survive closure. Very important for you to note. So you should know that you don't just come and start changing. The only time you're allowed to change a lease agreement is when the lease is due, or when there are new tenants. That is, new tenants that you're just bringing into the property. That is a period when you can do that. But in a period whereby the tenants are there and their lease has not expired, you have to honor it. So in that your introductory letter you're sending out to the tenant, those are things you need to state out there so that you don't create a panic. Because I've seen tenants, when they hear that the property is about to be sold, they get to start panicking and they start leaving. That can create an issue for you. You find out that vacancies will go up. Those are things you want to avoid. So it's very important that you manage this process with the seller, whoever you're buying it from. I have a question in the Q&A session. Somebody is asking, if they have existing contracts for the utility, have you been able to negotiate the same terms with this utility? This is a very, very good question. Let me say it out for those of you that can't see it. It says, if they have existing contracts for utilities, have you been able to negotiate the same deals with this utility company? So this is what I do, and you can treat it how you want. But for us, when a tenant has an existing contract, regardless of whether it's utility contract or any form of contract, we go through it and we see if we can get better terms in the market. So for electrical and gas, we have a broker that goes to help us shop. So what we do when we are under contract, those are the exercises we are doing. We are not just folding our hands and saying, let's wait until we close. We are going through shopping for better options. So if we have a better option out there, we will state in the contract, because in the contract, in the purchase agreement, you have the ability to reject the contract you don't want. It can be utility, it can be maybe the pool contract, it can be the laundry contract. You can determine if it survives closure. So these are things you need to understand. What are the contracts you want? If you want them, you have to state it on time. You have a time period for you to inform the seller that you don't need this contract. So before we get to that time when we say we don't need the contract, we would have done our own due diligence to find out if the seller has competitive utility or competitive contract. If it does, we'll take over it. We'll inform the seller that we want to assume the terms. So what the seller does is to introduce us to the company that is in it and informing them that I am selling this property to these people. This will be the new owners and they will be assuming my contract. So that is the way it's being done. But this thing you need to liaise with the seller and all that. Then, for example, if you don't need the contract, it's still the same thing. You state it there to the seller. I don't need this contract. I need you to terminate it before we close. The PSA sorts all these things. So it's important that during your PSA, all these things are addressed so that you don't have issues when you are closing. Yes, so that is how you negotiate it. So you just shop around. If you have competitive ones, you can cancel it. If you have competitive ones, you take the better deals and all that. So that is how it is. It's up to you to decide what exactly you want. Thank you so much, Grenchi Rivers, for your question. You can keep your questions coming in. I'm here to answer them. Today is Ask the Multifamily Expert. So go ahead and ask your questions. If not, I'll keep talking until it's time for me to exit. The next thing for you to do after securing the property and bringing in your management team is your financial and administrative setup. So I literally do this before we close. We open up our bank account, the account we intend to use to run the property. It's very important. Let me let you know this. For properties that are like 50 units and above, it's important that you have a separate account. You don't have the general account that the property management normally operates. So for smaller properties, this is the standard. They literally don't open bank accounts for little properties. They use maybe one or two general accounts to service all those little accounts. But when you are buying bigger units, like say 50 units and above and all that, actually it also depends on the property management company. When you're buying those kind of units, you need to have a separate account. So what we do is that the property management opens up an account in our name. So let's say our name is ABC LLC. They're going to open an account, a joint account between we and them. So you also see their name on the bank statement. You see our name. So we are joint owners of that account. But the thing is, our duty in that account is to oversee things. Theirs is to run the account. So regardless of the fact that we are the owners, we don't just go there and start pulling money without their consent. In short, we do not touch any money there. When we need money, we just go right ahead and ask them, send so amount of money to our account. And really, because they are managing your cash flow, your money, they will not just go and start issuing the money to you. They will have to check if what you have is enough to service whatever it is you're demanding for. For example, if we need to give investors money, the first thing for us to do is we have access to the account, right? So we can decide to pull out the money ourselves. No, but we go through the process. You have to work alongside with your property management company. So what we do is we want you to deposit so amount of money to this account for us to do our distributions to our investors. The reply we normally get is, okay, let us check what the cash flow is. Let's see if we have sufficient amount to take care of our expenses and also to take care of our mortgage liabilities. If we see we do, we'll give you exactly what you asked for. If not, we'll have to refuse you on this. Yes, you need a property management company that can help you manage your funds, not a property management company that when you say, give me this, they just immediately give it to you without assessing the risk of you having access to that amount and all that. So that's very important. So Nikisha, your question is so much value in this Q&A and I want to be able to watch. Yes, exactly. You're going to have it. If you've not joined our YouTube page, now we've changed it from Blue Ocean Multifamily Group. It's no longer Blue Ocean Multifamily Group. It's now BBO Fury. And the reason why we did that is because so many people don't know Blue Ocean. They know BBO Fury. So we just felt like it would be easier for people to connect directly with me than going through Blue Ocean. Blue Ocean is still our company, is how we operate, is how we do our business. But because we want to have a one-on-one relationship with people, we decided to change our YouTube page to BB Ofiri. So when you go there, you just need to subscribe and like. You see the videos popping in afterwards. Yes, so you're going to get a replay. And also on our Facebook page, as we speak now, it is streamed live on the Facebook page. So if you go to our Facebook page, which is the same BB Ofiri, we had to change that from Blue Ocean, BB Ofiri. And we also have a group. It's a private group where we post only to those people in those groups. You can join that group. The group is also called Blue Ocean Multifamily Group. It's not BB Ofiri. On Facebook, it is Blue Ocean Multifamily Group. So go right ahead and be a part of it, and you can get access to all our replays. We are not stingy with our videos on our recording. We ensure that everyone that is following us will always have access to it. Okay, so after opening up your bank account, the next thing for you to do is your administrative setup. So we also do this right before we close. We don't want to do it after we've closed. Administrative setup is things like your property management software. You want to set that up. You want to transition what the current seller like, some items from it. You want to put the current tenant into it. You want to put all the information that are required into your new software so that you can go on in a seamless way. So it's very important for you to have that set up. So you should have known the property management software you want to use. So for me, I've used about 5 different software. So I currently use Entrada, Resmin, Budium. I've forgotten many of their names because I've stopped using them. So the ones I currently use is Entrada and Resmi and Appfolio. I use those 3 apps. So already we know based on the property, like for student housing, we use Entrada because it's student friendly. But for residential like this, we either use Appfolio or Resmi. But I kind of now prefer Resmi and all that. For me, it's easier. So you can go do your findings and pick one. But for me, I'm picking Resmi. So before we close, we engage with Resmi. We tell them it's a property management company that helps us to do this. So please don't get yourself worked out. You've engaged the property management company. They're the ones that will start engaging the property management software company. They'll start doing those heavy lifting. All you need to do is to ensure that they're on track. track. The next thing is for you to conduct a detailed property inspection. So now that you've closed, you've done some things during your due diligence, you've already pointed out the things you want to do. Now you have to go back again and check. You have to go back and do one-on-one. You have to start checking for leakages. You have to start checking for the condition of the unit once again, so that you can prioritize what and where needs immediate attention. So you need to do a detailed property inspection. The one you did during due diligence is good, but this one is the one that you want to use to execute. You want to use it to start addressing issues immediately, because another thing you also want to do is you want to show the tenant how much you care about them. So in the process of you going into those units, you're engaging, you are making them feel your presence, you are asking them questions. Are they happy? What do they like? So that is also an avenue for you to know your tenants and for the tenants to tell you exactly what they expect, because everything you intend to do is for the tenant. Your value add should be aligned to your tenant needs, not just for your own need. The idea is between your 0 to 30 days, you are transitioning and taking some immediate actions. You're securing the property, your property management is on ground, your financial administrative setup is on ground, you're conducting detailed property management, you're implementing tenant communication plan. So this, like I said, when you are going into those properties, you're engaging, you're also telling them how they can reach you and how you can reach them. You're optimizing operations and staffing. At that point, you should have known the payroll team, the team on ground that will be there to help you manage. You're executing your value add strategy. So immediately you take over, you start to execute. Whatever it is your business plan is, you have to start up from day one. There's no time to waste, because any time wasted will affect your entire business plan. So it's important that you start immediately. Again, you need to monitor your financial and operational metrics. While you are trying to stabilize things, you're also monitoring your operational metrics. There are KPIs you should have set up before you close. There are things you should have set up, your KPI metrics. I've discussed this in previous video. If you want to know more about how to set up KPIs, go to my YouTube video, subscribe to it, and watch what are KPIs that you should set up for your properties. But guess what? Not all properties are the same. So the same thing, not all KPIs are the same. There are different measures for different properties, although there are some standard that you need to measure regardless of the property. The next one is build relationships with the community. Like I said, I repeat again, the tenant wants to know how much you care about them. They all want to know that. So it's important you start building that relationship with them so that you can retain them. You want to reduce the turnover cost with your tenants. The next is, how do you ensure a smooth transition from the previous owner to your management team? You want to establish clear communication with your seller. How do you do that? Is through your purchase agreement. Review all existing contract. I've mentioned this. You need to review this before you even close on the deal. You conduct a proper property walkthrough. You secure all necessary documents and financials. Doing your due diligence when you're under contract is a period where you ask for a lot of documentation. So you need to secure them, get them, because after you close on the property, the probability that you will not get access to those things are high. So please ask for them right before you close on your deal. There are so many things you should do during your 0 to 30 days. The next thing you should be doing from your 31 to 60 days is executing your business plan. Although your plan starts from day one, but it's at this point in time, because now you are stable, you've known your tenant, all the things and your property management software, you have your system running, everything is, at least at that time, you should have understood what exactly you're dealing with. So 31 to 60 days is now when you now narrow it down to, yes, I want to execute my business plan. So there's a question here that says, what are the best practices for implementing rent increases or operational changes without disrupting occupancy? You cannot cancel the lease agreement. You have to honor the lease agreement. So how do you start implementing rent increases during that period? Literally, if the tenants are there for that period of time, there are little or nothing you can do, but you need to check the lease agreement if there are wiggle rooms for you to add an addendum. So yes, you have a lease agreement, but we've seen some lease agreement that gives you the ability to add on some other forms of expenses or some other form of income that you can get from a tenant. So when we took over a property, we checked the lease agreement that the seller had with the tenant, and in that place we noticed there was a loophole for us to include parking, that reserve parking, they'll be paying for their pest control. So there's a wiggle room for us to add an addendum to the lease that they were signing. So you need to check what exactly is in the lease and to know if you can. But in terms of the base rent, there's nothing you can do about it. You just have to honor it. But in terms of adding other auxiliary kind of income, you need to check the lease agreement if there's a wiggle room for you to do that. I've seen lease agreement that gives us the opportunity even without breaking the lease or without we dishonoring the currently. So check. That is a strategy that you can use use. The next one is, how do you handle existing tenants during a transition, especially if major renovations are planned? So you need to carry your tenants along. If you're planning major renovation, let's say for the exterior, like the property we bought in December is an heavy lift. We intended to change the roof. We intended to do a lot of exterior things that would affect every of the tenants, because we're painting the property and we need to also paint the doors in and out. So those things, they're very important. So we had to inform the tenants right ahead that we want the property to look beautiful and we want them to love where they're staying. So we need to change the overall view of the property. We had to inform them, and definitely they will support. Everyone likes something good. So it's how you communicate that is now important. So you have to inform them on time, give them ample notice to get ready, and that's how you carry them along. And also tell them the benefit of it and what opportunities it will give to them and all that. So you can kind of educate them while you're introducing those kind of heavy repairs and all that. And for cases whereby it's an interior kind of repair, you also have to engage them. Definitely they will be happy to do that, but you might need to relocate them somewhere else to carry out that repair. I normally don't try to renovate units where I have tenants occupying. What I get to do is when they leave, I try to do. But in a case whereby, let's say there are serious damages and I just have to do it, I might need to ask them if they want to relocate to another property. And let me tell you a secret. The only reason why I would try and do that is if there is an opportunity for me to bump up a significant rent in that unit. So if there's a good return on that unit, I might be enticed to talk to a tenant to say, can we renovate your unit and give you a better one? They're likely to say yes. Some of them will say no. We've tried it both ways. We've heard no. We have people that are very, very attached to their belongings. They don't want you to change anything and all that. So we're not able to do that. But some will gladly do that. You have the ability to move them to another unit, maybe a vacant unit, and do that repair and indirectly increase the rent on the one you've done and get more on it. So you can do that, or you take them to a place because you cannot discomfort them, or sometimes you can give them concessions. So we've had cases whereby we had to do a major renovation in a tenant's building, but we give them a concession, 50%, 20% discount on their rent. So there are things you can do to ensure that you are not disrupting the occupancy of your tenant. The next one is, what role does property management play in the stabilization process, and how do you hold them accountable? So as owners, you are the one that employs a property management company, and your role is to ensure that they're executing your business plan. So the property management company are the ones that will do the day-to-day activity on that property. You don't have to do that. Yours is to monitor and ensure that they're executing your plan. So their role is to stabilize the property. You might need to give them an idea of what is your expectation. And if they're a good property management company and they've been doing this over and over again, it's just a kick and start. Just put the key there and start. That is how it is, because they already know what they are doing. But the role to stabilize the property lies on the property management stabilization process. But remember, you have a business plan. You need to communicate that to them so they know exactly what you need to do, because they need to understand how critical it is for you to stabilize the property, because it's possible that your projections are based on how many people are on that property, how much income you're getting. So if the property is not stable, you will not be able to hit that target. So it's important that you communicate that very well at the beginning, what your expectations are, so that they know what to address straight up and all that. So for the property we closed last year, December, what they are addressing for us is the base rent, because we need tenants that can pay the rent. They're taking out the bad tenants. That is what they're focusing on. The second phase of what we'll be doing is to start adding other income. Right now, we are not issuing any other form of income like reserve parking, pest control. We're not doing all that. We intend to do that in our second phase. The first phase is take out bad tenants, because we need stability. We need our occupancy to go up with the right tenant and all that. We need our delinquencies, our bad debt to go down. So those were the things we communicated at the beginning. So those are things they're addressing. So you need to communicate that at the beginning. So 61 to 90 days is time for you to start fine-tuning and start stabilizing the property. So there's a question that says, what are some red flags that indicate a deal might not stabilize as expected? So what are the red flags that shows you that your deal might not perform as you expected? I will repeat it again. You make money when you buy. Many things start from the beginning. So there are some red flags that indicate a deal might not stabilize. Is one, when you're overly aggressive on your rent projection. So these things are done at the beginning. If you did not do your market research properly and you went to assume a wrong projection, it's going to affect you hitting your target. You will not be able to hit it because the beginning you didn't do the job well. So we're seeing that play out. Some people were so aggressive in their projections, in their rent escalation inflation. We saw some people increasing. We've seen some people saying that they project that every year the rent will be increasing by 5%, 10%, 15%. Guess what? The market is flat, guys. So if you've said that the market was going to increase by 5%, good riddance. I am very sorry for you. So market research is very, very important. But does it mean that the market cannot soften? Yes, we see that happen. In 2022, the market was at its peak, and late 2023, late 2024, we started seeing the market softening. We started seeing markets that were very high coming down. Now we are seeing concessions. We are seeing sellers giving tenants concessions. There was even an advert I saw in one property. It says, come and stay here for free. Do you know what they are doing? They are giving about 3 months free rent. So if you got that wrong at the beginning, if you did not make your projections right at the beginning, that might be a red flag that you will not be able to hit your expectation. The next one is high economy vacancy. A property with high delinquency shows you that you will not be able to hit your expectation. The next one is when you underestimate your capex. This is a very, very important point. If you do not do your capex budget well, you underestimated it, you start dipping your hand into other forms of income, and before you know it, you will not be able to hit your target. So it's important that you get that right as well. There are other factors you might not have control over. Is market softening. What can cause market softening or oversupply? Market softening can be caused by the economy, can be caused by oversupply of inventories. So for example, if so many properties will be released into the market, like so many new builds to be released, these things can affect your projections and all that. Market softening, the economy, you see the Fed is trying to bring down interest rate. Now things are going down and all that. So if you've projected very high, that might affect it. Weak tenant base. If you have a weak tenant profile on your property, be sure that you will not be able to achieve it because they will not be paying rent. In short, your property will be beaten up. They will not pay rent. You'll be chasing them in court, spending a lot of money to evict them. So a bad tenant base will not help you hit your target. And over leveraging. Over leveraging is another point, another red flag. So if, for example, something affects the cash flow of the property and you're overly leveraged, that can affect the performance of your property. In summary, what I'm trying to say is that things you should do, the 90 days plans actually starts from the beginning, right before you even sign your purchase agreement, because so many things will need to be addressed in the purchasing agreement. It's not a 1 to 90 days plan. It's actually from zero. That is from day one of when you are even underwriting. These are things you need to start considering right before you close on your deal. So many of them will start from the beginning, right before you close on your deal. So I'm going to wrap up today with this. If you've not joined us on our social media channel, please go ahead. And I have another exciting news for you. We're going to be having another edition of Multifamily Jumpstart. This time around is going to be centered around operations. I have over 14 years in operations in multifamily industry and even in the real estate industry. So the next episode is going to be about operating. Thank you so much, and Rivers, a very informative call. Thank you for your time today. Our next event is going to be more about operations. That is the most important part in the entire investment. If you get that wrong, your entire investment will go down the drain. So we're going to focus it on that. We're going to have some guest speakers that will be talking about different areas, but I'll be managing a lot of the conversation in that area. I hope you guys will be able to attend it. And like always, we'll also be giving some people some freebies during that time. So you want to take advantage of it. The last one we did, we gave 2 people an opportunity to join us on our current deal. We have a current deal currently, and those people are there for free. They literally don't have to raise any money or do anything. They will just have equity on that property. So we'll be doing that in our next edition. But that, I'm not saying we'll be giving you an opportunity to join us on a deal. It can be anything, but definitely we're going to give us something to anyone that attends. Although there are criteria for winning that, all you need to do is to show up. So thank you all for your time. I hope to see you again. My name once again is Bibi Ofiri, and thank you for listening today. Thank you and have a wonderful day.